Have you ever stared at a stock chart and felt like you were trying to read a foreign language? Just a bunch of random lines and squiggles? Well, what if I told you there are stories hidden in those charts? Today, we're going to decode one of my favorites, a powerful pattern that can signal a huge plot twist for a stock. It's called the atom and atom double bottom. All right, let's get into it.
So right off the bat, you see this W shape at the bottom of a stock's decline. Now, this isn't just a pretty letter. It's a classic signal that the sellers are getting tired, they're running out of steam, and the buyers are finally starting to show up and fight back. Think of it as a potential turning point where a downward spiral might be over. But here's the thing. Not every W you see is the real deal.
And that's where we need to get specific. We're talking about the atom and atom version of this pattern. What makes it so special? Well, like anything in trading, the devil is in the details. And knowing these details is what separates a lucky guess from a high-probability trade. So, the absolute signature of this pattern is its two bottoms. I want you to look for two very sharp, very narrow V-shaped spikes. The person who literally wrote the book on this stuff described it perfectly. He said it looks like a person on stilts, two skinny legs poking down to almost the exact same price level. That sharp V tells you something important. Sellers tried to push the price down hard, and buyers instantly rejected it, twice. Okay, now if you remember one thing from this whole explainer, make it this. See that peak in between the two V-shaped bottoms? We draw a horizontal line there, and we call that the confirmation line. And listen up, this pattern is absolutely meaningless. It's not real until the price closes above that line. That's the trigger. That's the market screaming, okay, the reversal is for real. So, to make sure we don't get faked out, we need a checklist. I want you to think of this as your pre-flight inspection before you even think about putting on a trade. Let's go through the master's checklist for spotting a genuine atom and atom double bottom. First things first, there has to be a clear downtrend leading into the pattern. You can't have a reversal without something to reverse, right? Second, you need those two distinct, spiky V-shaped bottoms. No wide, rounded U-shapes allowed here. Third, that bounce in the middle, it has to be a meaningful one, at least a 10% rise from the lows. This shows the buyers have some real muscle. And finally, the most critical step of all, you have to wait for the price to close above that confirmation line. No confirmation, no trade. It's that simple.
Okay, let's look at this chart. This is a perfect example of what we're talking about. See the downtrend coming in from the left? Check. And there they are, two sharp, spiky bottoms. That's our atom and atom. The peak right in the middle gives us our confirmation line. And then, boom. Look at that. The price pushes up and closes above the line. That's our breakout. That's the green light.
Now here's a little pro tip, something straight from the data. While a 10% rise in the middle is the minimum, the research shows that taller patterns, the ones where that middle peak is way higher, say 20 or 30%, those tend to perform so much better. A taller W is a much more powerful signal.
So, the theory is great. The pattern looks nice on a chart. But let's get down to the only question that really matters for a trader. Does this thing actually work? What are the odds? What does the data say?
The answer? In a bull market, after this pattern confirms with a breakout, the average climb in price is a whopping 35%. Let that sink in. That's a massive move, and it really shows you the predictive power we're dealing with when all the conditions are right.
But of course, context is everything. You have to know what kind of market you're in. This chart shows it all. In a healthy bull market, you get that awesome 35% average rise. But try to trade this pattern in a weak, bear market, and that performance drops to 24%. The big takeaway? You always want to have the wind at your back. Trading bullish patterns in a bull market just improves your odds dramatically.
Now, one more thing you absolutely have to be prepared for is something we call a throwback. In about 2/3 of cases, after the price breaks out, it's going to pull back and retest that old confirmation line. New traders see this and they panic. They think the trade failed. But seasoned traders, we see it as a second chance, an opportunity to get in at a great price before the stock really takes off.
Of course, no chart pattern is a crystal ball. They don't work 100% of the time. And honestly, understanding why they fail is just as important as knowing when they succeed. So let's look at a classic rookie mistake with a quick cautionary tale.
Okay, so meet Ted. Ted's watching this chart, he sees the two bottoms, and he sees the price starting to tick up from that second low. He's getting that feeling, that excitement. He thinks he's found the perfect trade, and he wants to be the hero who gets in early, before anyone else. And this is what's going through his head. I mean, it sounds logical, doesn't it? Why would I wait for the price to go up? I should buy it now, while it's cheap. This kind of thinking is probably the single most common and most expensive mistake new traders make. Ted's big mistake was impatience. He jumped the gun. He bet on a pattern that hadn't actually formed yet. The master's rule is non-negotiable. You always wait for the price to close above that confirmation line. Why? Because until that happens, the stock is still officially in a downtrend. Ted bet on hope. A professional bets on confirmation. And as you can see, the downtrend just kept on going.
So how do we avoid being like Ted? How do we trade this pattern like a pro? Let's put it all together and go over the master's playbook, the key strategies for trading this setup successfully. Let's run through the playbook. Rule number 1, I can't say it enough, wait for confirmation. Rule number 2, trade with the overall market trend, put the odds in your favor. 3, expect throwbacks and view them as opportunities, not failures. 4, a nice little trick is to see if other stocks in the same industry are also trying to bottom out. And finally, use the measure rule to set a price target. All you do is take the height of the pattern from the lowest low to the confirmation line and add that number to the breakout price. It gives you a great estimate for where the stock could be headed.
And for those of you who want the absolute A-plus textbook setups, the data gives us even more clues. The best performing patterns tend to be the tall ones. Often, you'll see the second bottom is just slightly lower than the first one. And here's a big one. Look at the volume. You want to see volume drying up as the second bottom forms. And then, bam, a huge spike in volume on the day it breaks out. That's conviction.
So let's look at it all come together. This is a thing of beauty. You've got your atom and atom bottom, the price breaks out above the confirmation line on heavy volume, then it pulls back in a perfect little throwback, tests that line as new support, and from there, it's off to the races, trending right up towards our price target. That is the playbook executed to perfection. So in the end, the atom and atom double bottom isn't just some random W on a screen. It's a story of a battle, a turning point where control might be shifting from the sellers to the buyers. But the secret to reading that story? It's all about knowing the details, being disciplined, and above all, having the patience to wait for confirmation. So, now that you know, what are you going to be looking for in your next chart?